Hello and welcome to Insurance in Canada. I'm your host, Rick Pedeta. Thank you so much for joining me. On today's episode, we're going to be looking at three episodes, three episodes with three articles. The first one looks at rising claims costs in aviation insurance. Second article, are Ontario homeowners keeping secrets from their insurance companies, and can those secrets affect their coverage? And our last article, we're going to be looking at hurricanes impacting Atlantic Canada and how those hurricanes might be affecting the wildfire situation in that particular area. So, without further ado, let's look at insurance in the news. So, our first article today looks at rising claims costs in aviation insurance. We touched on this in a previous episode of Insurance in Canada. So, this might be a follow on article to what we saw before earlier this year. So, let's take a look at the article. Rising aviation claims reflect soaring costs. HDI underwriter Steve Godfrey of HDI Canada says aviation insurers face a severity problem, not a frequency one, which is not surprising. That pretty much applies to most types of insurance that insure big, expensive items. When it comes to claims costs, you're not going to see a frequency of a lot of claims involving those particular items, but when the claim does occur, it's going to be big ones. So, for instance, mega yachts. You don't see a lot of accidents involving mega yachts. Yes, I know they are involved in accidents, but you don't see as many as you do with like personal watercraft, speedboats, runabouts. Those types of claims, those types of vessels, you'll see are involved in accidents more frequently. However, when we're talking about an accident involving one of the mega yachts, they might not happen as often, but they tend to be big, big claims, much larger than you would find for your personal watercraft, ski-doos, runabouts, sailboats, those types. So same would apply with aviation insurance. You don't see a lot of claims in aviation insurance, but we're talking about, even when we're talking about aircraft, personal aircraft, small aircraft, even if we're talking like a little Cessna 172, even a brand new one of those types of planes can still cost as much as a small house. So, yeah, any claim involving aircraft is going to be big claims, regardless of how often those claims occurs. Obviously, if they became more frequent, then there'd be a crisis in aviation insurance. But severity of claims is still going to be an issue as well. So let's take a look to see what could be the source of that. Aviation underwriters are facing a troubling paradox. While the number of losses have remained relatively stable, the cost of resolving those claims is rising sharply, and the reasons are rooted far beyond the hangar. According to Steve Godfrey, head of aviation at HDI Global SE Canada, a combination of global supply chain strain, labor shortages, and a prolonged soft market conditions is transforming even routine claims into major financial exposures. And we talked about the soft market versus hard market in the previous episode. If you haven't seen that episode or not familiar, in insurance, a hard market is a period because of rising claims where insurance companies raise premiums. They may stop to insure certain types of risks, or even in that category of insurance that they'll still want to insure in. They become far more selective in the types of risks they want to insure. In a soft market, it goes the opposite way. You see premiums come down, underwriting rules relax. So in commercial insurance, we're seeing a soft market. Personal lines, unfortunately, no, we're not seeing a soft market in that aspect. Homeowners, private passenger automobiles, habitational insurance, no, we're not seeing any sort of soft market there. But commercial, yes, we are, and it looks like that's affecting the the aviation insurance side. Sure, you'll see maybe premiums go down, so it does benefit the consumer on a soft market because of that. Maybe they have a type of aircraft that they couldn't find insurance before in the past, but maybe now they could. But there are repercussions if the insurance companies relax rates too far without taking into account claims, because just because claims have been good in the past or better in the past doesn't mean it's going to carry on throughout the future. So Back to the article. The cost of and availability of parts is driving claims inflation right now, Godfrey said, pointing to widespread supply disruptions that continue to affect aviation maintenance. Compounding the issue is a shortage of skilled professionals, both pilots and aircraft maintenance engineers. The scarcity drives up labor costs and extend repair times, where once an aircraft could be grounded for a few weeks awaiting a part, it may now sit idle for months, not because of the scale of the damage, but because the parts simply can't be sourced. And we've seen it in other aspects of property and casualty insurance as well. We saw that in automobile insurance, especially during the pandemic and a little after the pandemic, when parts were very scarce because all the plants were shut down, so the auto manufacturers and aftermarket part producers had stopped producing because their plants were shut down because of the pandemic. But you still find that occurring these days as well because of the issues when it comes to trade wars, the tariffs being imposed by the United States. But I imagine that would have hit the aviation worse than automobiles, because in Canada we do produce some automobile parts, some aftermarket parts, even refurbished parts. But as far as I know, I don't know of any manufacturer of aftermarket aviation parts. So I imagine any aircraft owner in Canada, they're going to have to be sourcing their parts from outside Canada, especially from the United States. And of course, with the issues when it comes to the trade war, that's probably impacting that availability of parts for aircrafts, which is going to affect the ability to repair aircraft in a timely manner. Back to the article, these delays are particularly problematic when the policy includes coverage for a replacement aircraft, and an aircraft is sitting on the ground for 6 months waiting for repairs, and we are paying for a replacement aircraft for 6 months, Godfrey said. The total payout can quickly escalate. Limits for this coverage have also risen in recent years, a trend he ties to the soft market. The current soft market in aviation insurance is enabling what Godfrey refers to as a coverage creep, the gradual broadening of policy terms, limits, and enhancements that can quietly transform the financial impact of even routine claims. While these additions are often well-intentioned, they also come with long-term consequences for insurers trying to maintain sustainable profits. It's a soft market. Brokers are under pressure to deliver more perceived value to their clients, Godfrey said. They're extracting additional coverages, and underwriters, in an effort to maintain their positions on desirable risks, are probably inclined to granting these. And that's a very true statement what Mr. Godfrey indicated. Yeah, in the soft market conditions, it is more difficult for brokers just because competition increases, rates decrease. So if your rates for the insurance company that you represent are not going down as to other insurance companies that you do not represent, then it becomes difficult to try and retain those clients. And even if you're able to go to your underwriter to try and reduce premiums, and not just talking about aviation insurance, but other types of insurance as well, where you have that ability to negotiate with your underwriter. Yeah, it does become a more soft markets can be both a boon and a blessing to brokers. Now your markets are more relaxed in terms of their ability to accept other risks that they might not have accepted in the past. Rates become more stable, so your clients may be happy, but they may still try and seek coverage elsewhere, better deal elsewhere. So it becomes more difficult to try and retain those clients. So yeah, soft markets can be, like I said, a boon or a blessing to brokers as well. Over time, enhancements that were once considered optional or premium features have become standard inclusions, even on relatively modest risks. Some policies now include coverage for sudden and accidental pollution, which protects against unexpected environmental damage, a costly but rarely triggered exposure. For most general aviation operators, that's true. Rarely triggered, that's true, but when it does occur, it's going to be a costly expense for a aircraft owner to deal with themselves. Same thing goes with watercraft owners as well. Your vessel, unless it's even if it's an electric vessel for that matter, your vessel does have the ability to pollute the environment. You might be as careful as possible, but your it just happens that your vessel starts leaking oil into the waters, and now you're responsible for that cleanup. So having that pollution coverage on your watercraft policy is just as important as having it on your aircraft policy, even more so, just because the extent of the pollution can spread much more rapidly and further than most aircraft incidents. I say most. Obviously, if the incident occurs in the air, then yeah, it could be a different story than if it's on the ground. Back to the article, others incorporate betterment coverage where the insurer pays not just to repair damaged parts, but to replace them with newer or upgraded components, potentially increasing the value of the aircraft beyond its pre-loss state. Expanded limits for replacement aircraft rental expenses have also become common, designed to help operators maintain service during downtime, but prone to being stretched by modern supply chain delays. And that loss of use coverage is pretty important for those who generate income from the use of their aircraft, make deliveries, sightseeing. May not be as important to recreational aircraft operators and owners, but definitely when it comes to those on the commercial side, it can be a critical coverage. This last feature, Godfrey noticed, can significantly inflate a claim if an aircraft is grounded for months due to a parts shortage, and the policy includes a high replacement rental limit. The total payout can far exceed the actual repair cost. For example, a helicopter experiencing a main motor strike might require $100,000 in repairs, but if replacement blades are unavailable and the aircraft remains grounded for 6 months, and the policy includes a $500,000 or even $1 million in rental aircraft reimbursement, the total claim could reach 5 or 6 times the cost of the damage itself. In that situation, insurers are not just covering the technical repair, they're effectively funding the operational continuity of the business during prolonged downtime. And keep in mind, those additional costs for loss of use can factor in when an insurance company decides whether the aircraft is going to be a constructive total loss. So for the example they gave with the helicopter, a main motor strike, it's maybe only 100,000 in repairs. But if it's going to be 6 months for this aircraft to be on the ground, and our replacement loss of use costs are going to approach 500, 600, 700,000. How close are we really getting to the actual cash value of this helicopter? So it could be, even though a main rotor strike could something that's easily repairable by a aircraft mechanic, the insurance company is just going to consider the aircraft a total loss just because now we're reaching the actual cash value of the aircraft. So might as well just consider the aircraft a total loss and just pay out the actual cash value, as opposed to, sitting around and waiting to see whether the loss of use cost is going to increase beyond what was originally forecasted. Is it going to reach that $1 million limit? Who knows? So, but once again, not something you only see on aircraft side. You see that on the automobile side, automobile insurance side as well. So it's lessons that's being learned. We're learning here today on aircraft insurance, but you see it in other aspects of insurance as well. Back to the article, coverage creep is difficult to reverse once embedded in the policy wordings. Many of the expanded endorsements and limits added during the soft market may not have not been reevaluated in light of today's challenges, where claims, inflation, and longer repair timelines are becoming the norm. According to Godfrey, this is where underwriters will likely start drawing firmer lines. He said, as we see opportunity on a loss active account to begin, to maybe pull some of that back. That's obviously going to be where you'd want to start. For insurers, that means reining in coverage limits, reassessing whether add-ons reflect actual risk exposure, and tightening the language to ensure long-term viability. Sounds like the hallmarks of a hard market to me. Godfrey emphasized that underwriters aren't seeing a spike in frequency of incidents. The problem is severity, inflated by external factors and generous coverage structures that may no longer be sustainable. It's now becoming a question of the inflation of the cost of repairs. Despite this, adjusting rate or restricting coverage remains difficult due to ongoing market competition. Still, insurers are beginning to scrutinize claims performance more closely, especially on loss active accounts. Loss active accounts means those policies that have a lot of losses in the past. Going on to our second, but like us, before I end with this first article, if you're an aircraft owner, or if you're a broker agent who specializes in aviation insurance, please let me know in the comments. Anything else you can add to what I'm talking about? Let me know your experience in what you're seeing in the market as well. So it's always good to get ground eye observations of what people who are in the market see for themselves. Is this accurate? Is this what you think is going to carry on for a while, or do you see it changing around? Going to our next articles, most Ontarians aren't telling their insurers about major home rentals, a survey says. So before we get into it, it is a requirement of your homeowner's policy that any renovations over a certain amount must be disclosed to your insurance company. The value of those renovations can vary from policy to policy. Usually it's about 25 to 30,000 and above. So if you're planning to add an addition to your house, maybe remodel your kitchen, remodel your bathroom. If it's going to cost at least 25, let's just call it 25,000, then you should inform your insurance company that you are undergoing these renovations. If you fail to do so, this can affect coverage under your policy because, like I said, it is a requirement of the policy. It is a material change in risk, because these changes might affect the cost to actually rebuild your house should something happen that totally destroys your home. So the premium on your homeowner's policy is mostly based on the replacement cost of your house. So if something is going to affect that, especially increase it, then that has to be disclosed to the insurance company. So let's take a look at the article. If your home insurance clients in Ontario just finished a major home renovation, there's a good chance they didn't tell their insurer about the upgrades, says a recent survey by lowestrates.ca. Just 47% of Ontario homeowners notified their insurer after completing major home upgrades, leaving many exposed to potential coverage gaps, the survey found. Whether it's finishing a basement, remodeling a bathroom, or updating plumbing or electrical systems, failing to report these changes can leave homeowners underinsured or worse, lead to denied claims if something goes wrong, lowestrates.ca warns. Now, keep in mind the extent of the renovation, what's actually being done. So, I mean, if you're replacing your roof, you must have one big roof if the cost to replace the shingles on your roof or is going to cost 25,000 or more. I suppose if you have a large roof and you're going from shingles to, say, a metal roof, a high-end metal roof, then yeah, I suppose it could cost 25,000 or more. But some of these upgrades, for instance, plumbing or electrical upgrades, yeah, those things might not reach anywhere near the minimum limit that's required for you to inform your insurer. But you should still inform your insurer of plumbing and electrical updates. So if you upgrade, if you replace your electrical panel, if you replace some of the piping in your home, especially if it's older type plumbing systems like galvanized steel. Yeah, that's definitely galvanized steel. That's pipes, supply pipes. Definitely aren't code anymore in Ontario, and I don't think they're code anywhere else in Canada. I believe now they have to be at least copper supply pipes. But any sort of changes you do to your electrical or plumbing, you should inform your insurer anyways, because insurers like to see that homeowners are keeping up and maintaining and replacing old systems. Definitely if you replace your furnace or replace your roof, those definitely you want to inform your insurer of. Sometimes the premium might decrease a little bit by doing that, especially if it's been a while since you last updated. However, if you're in a situation where an insurance company is thinking about not renewing your policy, if they see you've been maintaining the home by updating electrical, plumbing, heating, roofing systems, that might sway them to stay on risk. So, like I said, anything involving plumbing, electrical, roof, heating, even if it doesn't reach the minimum 25,000 Still inform your insurance company about that. It can only benefit you. But like any other type of change to your house, any type of renovation, like I said, if it's at least a 25,000, then we're going to be informing the insurance company. Sometimes those renovations can include also renovations to electrical and plumbing, like for instance, a kitchen remodel or a bathroom remodel. Back to the article, 26% admitted they didn't inform their insurer at all about the upgrades. A similar percentage, 27%, were unaware of the need to notify or chose not to answer. Unaware of the need to notify, I can understand. The homeowner's policy is a very complicated document. The actual policy wordings themselves are quite extensive, and they're not exactly the most riveting read either. So we tell our clients to read over their wordings all the time, but a lot of people, after reading a page or two of the policy documents, because they pretty much read like a legal document. So it's there. Like I said, it's not exactly the most easiest read. So I can understand being unaware just because maybe that clause in the policy is somewhere on page 8 or 9. The insurer just never got that far into trying to read before they lost interest in reading the rest of their policy. However, us as brokers and agents as well, there's only so much we can tell you about the policy wordings, all the coverages, exclusions. Not too many people want to sit there and have a 45-minute discussion with their broker or agent about all the different conditions, exclusions of your policy. We'd like to, but like I said, not too many people are prepared to spend that much time getting to know their policy in depth like that. But I suppose if at the very least we can get through these important points, important pitfalls, and this being one of them, in time, hopefully enough people will know about it. That's this knowledge about having to inform your insurance company about this can be passed along, not just by people in the insurance industry, but in other industries as well. The other part, chose not to answer. Well, you're taking your coverage into you're risking this, having your claim denied, and you have nobody to blame it but yourself at this point. Back to the article. Many homeowners don't realize that upgrades like finishing a basement or adding a bathroom can affect their insurance coverage, says Stephen Harris, a licensed insurance broker and LewisRates.ca expert. If providers aren't informed of major changes, policies may not reflect the home's true value of risk, leaving owners exposed when it comes time to file a claim. The survey polled 731 Ontarians who used LewisRates.ca home's insurance quote between June 28th and July 3rd, 2025. And I imagine if you were to have the same poll in other provinces, you probably find the numbers to be similar in the other provinces as well. The wordings in a homeowner's policy, they're not exactly the same from insurance company to insurance company and from province to province, but they're pretty close to being similar from one province to another, especially if we're talking about an insurance company that does business in multiple provinces. They tend to use the same policy wordings for homeowners in Ontario and Alberta and Saskatchewan and Nova Scotia and PEI, just because why are you going to reinvent the wheel every time? We're insuring pretty much the exact same thing from province to province. So like I said, they tend to use the same policy wording. So those conditions you'll find from policyholder to policyholder would be the same in other provinces. So what we're talking about here, about the requirement to inform your insurer in Ontario, that same requirement is going to be regardless of where you're joining me from in Canada, and I can pretty much guarantee you in other countries as well. So if we were to look at a homeowner's policy in the United States, I'm willing to bet you dollars to donuts you'll find that same clause in a Massachusetts homeowner's policy or Nevada homeowner's policy as well. Insurance companies tend to like to copy each other's homework, so why come up with your own when somebody else has already figured it out? Just copy them and put it in your policy wordings. Do-it-yourself projects like painting, flooring, or tiling are generally safe from an insurance perspective, Harris says, but more significant renovations, such as adding units, finishing a basement, or fully remodeling a bathroom, requires notifying your insurer. So, yeah, if you plan to just repaint your bathroom, and you're just going to do it on your own. That's not the type of renovation that insurers are concerning themselves with. Basically, anything that involves tear out, yeah, that's the type of renovation we're going to be looking at having to inform your insurance company about. Most policies require the homeowner to disclose major changes. Failing to notify could lead to claims denials and policy cancellation. Additionally, if your insurer discovers undisclosed renovations, they may retroactively increase your premium. Harris recommends discussing planned renovations within 12 months with your insurer to avoid policy issues. It's a simple step that can prevent financial headaches down the line, he says. If you're hiring a contractor, make sure they carry their own liability insurance so you aren't held responsible for any damage they cause. Larger renovations require builder's risk insurance, a specialized policy protecting homes under construction or renovations from risks like fire, theft, and vandalism, for sure. If the renovations that you are going to be doing requires you to move out of the house, yes, before you start those renovations, talk to your broker, talk to your agent, talk to your insurer, because having to vacate the house is going to affect your coverage. So definitely we've reached a territory where we're meeting that minimum $25,000 limit, but now we're actually in a bigger risk because now the house is going to be vacant while undergoing these renovations. So your policy may no longer provide coverage at all during the renovation process. Generally, if you're going to be maintaining residence while the renovations are taking place, we're not in that territory anymore. But yeah, if you're going to be moving out because of the renovations, you're even in a bigger risk of having your coverage denied. So regardless if you're staying or having to move out, talk to your broker, talk to your agent, talk to your insurance company before undergoing the renovations, just to know what the requirements are and what we need to do in order to make sure coverage is going to be maintained. For homeowners, this coverage can also safeguard materials and property from unexpected events, including certain types of water damage, such as burst pipes. However, flooding may require additional endorsements depending on the policy provider. Lowest-rates.ca surveys found that 59% of Ontario homeowners polled reported tackling small DIY projects, 12% reported taking on both small and large renovations, while 5% focused solely on large-scale projects. So, yeah, once again, whenever you're in doubt, even a smidge of a doubt, talk to your broker, talk to your agent, talk to your insurance company. That is why they're there for. Our last article looks at hurricane season coming up in Atlantic Canada and the wildfire situation. How hurricanes are impacting Atlantic Canada wildfires. A water skimmer from Northwest Territories flies over the evacuation area where firefighters are battling the Long Lake wildfire in Nova Scotia's Annapolis County, outside the community of West Dalhousie, Nova Scotia. Hurricane Erin and other post-tropical storms passing by Atlantic Canada are adding a bit of a different element to wildfires burning in the region, but fire crews say they are prepared. Wind is only part of the fire equation, and I don't think it's a huge game-changing factor. Glenn McGillivray, managing director of the Institute for Catastrophic Loss Reduction, tells Canadian Underwriter on Monday. It's a pretty active fire season in Nova Scotia and Newfoundland. That's an understatement, that's for sure. Which is not totally common, but not exceptionally rare either. It just so happens that fire season also corresponds with North Atlantic hurricane season. Nova Scotia's largest wildfire has grown as firefighters continue with stronger winds following the passing of post-tropical storm Erin. Crews fighting the Long Lake fire in the Annapolis Valley, Nova Scotia, were gaining a bit of ground on the fire, but winds generated from post-tropical storm Erin were expected to worsen conditions, McGillivray said. The Long Lake wildfire remains out of control, but winds from the hurricane did not impact the fire as much as been feared on Saturday, CBC reported. In fact, the wind shifted in favorable directions, pushing the fire away from threatened homes in the West Dalhousie Road area. As of Friday afternoon, Erin was about 500 kilometers southwest of Sable Island, Nova Scotia, with a maximum sustainable wind of 148 kilometers an hour. The Long Lake fire is estimated at 7,700 180 hectares as of Monday afternoon. This would be Monday afternoon of last week. It damaged a number of homes Sunday after intensifying in the afternoon and evening, but the exact number has yet to be confirmed. Nova Scotia provincial government says in a press release. In a later release, the provincial government says 330 properties have been evacuated as of Monday. CBC adds some campers and trailers were destroyed earlier in the week. In nearby Newfoundland and Labrador, the Kingston fire in Consumption Bay on Newfoundland's southeast coast remains out of control, and more than 10,000 hectares in size. A reported 196 structures have been lost in the fire, McGillivray says. Though at this time we don't know entirely what exactly was destroyed. The 196 had electricity meters, so we can assume they are more than just outbuildings, he adds. A school and a post office were also destroyed, as were more than 200 wooden hydro poles. It is unknown at this point if the lost structures were insured or not, says Michael Connolly, Claims Pro Vice President for Atlantic Canada. We received a handful of claims that are fire-related, but nothing extremely alarming like we have seen in past wildfire evacuations situations. Our local team remains in a ready state to respond immediately to assist as required. Earlier this month, about 20,000 residents around St. John's were evacuated due to out-of-control wildfires in the province. Just as Hurricane Erin passes Atlantic Canada, Tropical Storm Ferdinand looks like it's going to miss Canada's eastern regions as of 9 a.m. Atlantic Daylight Time Monday. The Canadian Hurricane Center shows Ferdinand will pass East Nova Scotia and Newfoundland and Labrador, developing into a post-tropical storm with 65-kilometer-an-hour winds from late Tuesday night to Wednesday morning. It's too early to be able to determine what impact, if any, Ferdinand may have on wildfires in Atlantic Canada. But it's important to note that hurricanes in the North Atlantic Basin spin counterclockwise, kicking out more wind on their left western side than on their right eastern side. This could mean higher winds from Nova Scotia and Newfoundland. Much depends on how far out to sea the storm is. So hopefully the hurricanes, the wind is going to be an issue. Hopefully they also bring some rain too, to assist in the firefighting aspects. So it's kind of a double-edged sword when it comes to these hurricanes. Nobody wants to be in the path of a hurricane, but at this point, if you can get some remnants of the hurricane that can bring some rain to an area, especially areas that are involved in wildfire situations like we have on the East Coast, it can be a bit of a double-edged sword. We're dealing with the wildfires, but now we got to deal with potential flooding as well. So it seems for Atlantic Canada that it can't seem to catch a break these days. But like I said, we're still entering into hurricane season, so we'll still keep an eye on to see if any others develop in the South Atlantic to see what they might bring for Atlantic Canadians. So that is it for me for today. I'd like to thank you for joining me. If you like what I do here, please leave a like on this video. Please leave a comment on anything we've talked about today. If you please subscribe as well, and also share this video with anyone who you think might find this topic interesting. As I've said before, these episodes will be uploaded as audio podcasts to Spotify. And don't forget to follow Insurance in Canada on X/Twitter. And until next time, bye-bye.